Hi everybody, so today's FOMC day and that's later on this evening, so we might touch on that a little bit later, but firstly I just want to discuss some things that I've been working on, and that is just how to execute and manage trade ideas in low volume and low volatility markets. So the reason I find this tougher is that you don't quite get the same feedback from the market in terms of price action. Things aren't as aggressive and they maybe are slower, and so sometimes that, for example, makes the ladder harder to read. And so what I've been finding lately is that I have these ideas, they end up working, but I'm either struggling to find access to them or I'm struggling to stay in the trade long enough and I'm only getting like the first leg, and then it may grind in this horrible like low volume way or something like that, and I'm not staying in for it. So we're going to have a little dig into this. So the first example is from this morning, and it's an oil trade. So you can see that the market bid up yesterday, carried on bidding through cash, and then overnight, and it made this block. It's actually easy to see in the profile. I've just split today's Globex profile apart. You can see what happened overnight, like pre-EU session. Then in the morning, the market flagged here at the lows, and then you can see volumes did pick up and the market offered through. Now down here, selling stalled, and so this market just went sideways. But a key thing to note was that there wasn't any buying either. Eventually the market did squeeze, and it's kind of this funny 5-minute head and shoulders, I suppose you could call it. And then when it did squeeze, it then stopped again at the highs. Like you can see, the squeeze didn't come with volumes. And when it sat at the highs, there was no one buying, taking it through. And so actually, since this price action kind of relates here, well, we're still below the breakout point. We haven't got someone actually buying the market. So this idea of the market coming lower is still in play. And so what my idea was here is basically that up here this market got quite extended, and there was no initiative buying. Well, there was initiative buying, but it's quite stretched and sort of poorly developed, so I thought we could come back here. Since this market hasn't got back above here, or hadn't at the time got back above there, and then also hadn't played out the trade well, my idea was neither invalidated nor complete. And so really this was the great axis for another go. And I think what I'm missing right now, and the sort of key thing I've got to figure out, is that when the market does something like this, I've got to ask the question, what is the market not doing? And I think that's the key question in these lower sort of participation environments, and what the market wasn't doing then, it wasn't being bought. Now, another example of a trade that I struggled with accessing this week, but which idea I really liked, was the bund. And so you can see that after ECB, the market bid up and then left this poor auction at the highs. And I thought, okay, if we open down here, or if we open even lower, we could get this immediate liquidation, but we actually opened in range. Now I've split the day's profile up, so this is from Monday, and so you can see the market had this IB, it was in the range and in value, and then the market came lower and it created this balance. And I thought, well, actually it's quite a neutral position. But actually, when you think about this a little bit more, what this market's done is it's completed an auction. It's almost like completed, like a normal distribution in here. And then it's time to go. And you can see there is a bit of an asymmetry, right? We have a ledge here and a more nicely formed high. And also the market wasn't able to push through value very high. So, just like a few smaller day time frame things can help understand those skews if we just zoom out, rather than looking, okay, look, as you can see, there was really no volume during the morning, but what the structure it was creating was building position that it would then later leverage to make a move. So to summarize what we've been talking about, when the markets are a bit quieter, sometimes things take a lot longer to set up. They don't play out quite as quickly or aggressively, and so rather than getting too micro with the market, you've got to let it play out and build structure a little bit more, and you've got to ask questions sometimes, what is the market not doing, rather than what is the market doing.